Hi, this is Randy Finney with the Right Side of the Chart, and this is a mid-session update for Wednesday, March 19th, 2025. It's 12:06 p.m. Eastern Time as I'm starting the video, so we're about halfway through the trading session. And I just want to do one of those videos where I cover kind of an eclectic mix, some of the things I'm watching, potential trading opportunities. I'm going to start out so I don't forget them as cryptos. And I've been speaking to that quite a bit lately, including yesterday, just saying basically if the stock market, my oversold bounce scenario plays out and the stock market rallies, you're going to see crypto rally, and it rallies in a multiple of what the stock market does, meaning typically if the market goes up 1%, crypto is going to go up 3 or more, Bitcoin in particular, and vice versa. It cuts both ways. So, but it tends to trade in line. It's been a risk-on asset. There are periods where it's actually traded in not in line with the market, and all you have to do is recognize when that starts to happen, and then know that it's now no longer a correlated trade. But the important thing is your position sizing. Again, to be long or short Bitcoin is to be long or short the stock market. So especially the tech-heavy NASDAQ 100, the risk-on indexes. So just keep that in mind with your position sizing. All right, this is Bitcoin, one of several charts I'm using. That just shows you right here is a pretty decent support level, about 74,275. That if and when it gets there, depending on how things look, I may be a buyer. You know, I told you recently I've been long Bitcoin along with the markets, expecting positioning for a bounce. And I still think that's, the most likely scenario. So we've been coming up here a little more upside. Where to? I'll hone in on some other shorter term charts, but it'd be a gift to get it back here. That was a breakdown. That was really nice support. It was this trading range comparable to the trading range in the NASDAQ 100. We had a clear and impulsive breakdown followed by a back test, followed by a rejection. And so that would be, it's a potential, what I call kind of max bounce target, certainly a potential upside target if this rally can get a little bit of teeth here this week and maybe into next. And that would be, pretty decent move. We're at 84.9 right now, take you up about 92,790. That's the Bitcoin futures, of course, we're looking at. And that's what I trade. You can trade the crypto. If you have a crypto account, I like futures. And here's the crypto. This is from the Paxos exchange. This is, one, if you're trading it direct. And, I'll watch all these charts, kind of like watching the spot indexes versus the futures or the ETFs. There's a primary downtrend line, which also is a potential target. This chart is if I don't make mention, we're going back just 2 months hourly candles, but you can see a lot of clean reactions there. And this level right here, you can see I have the couple reactions here, one distinct reaction there, and then this has been, for the most part, capping Bitcoin now for weeks. We have this little minor kind of uptrend here. You're making higher lows. It's really what we call an ascending triangle pattern. That's the pattern technical analysis. So if it can pop to the upside, I will give you right now, let me do that for you, a midpoint target. I can see some resistance right about the middle of that range I have there, give or take right about here, roughly 87,400. Percentage-wise, that would give us about another 3.6% to get there, 3.5%. And but again, this would be what I would refer to as my current max potential bounce target. That trend line should come in around that 91, 115-ish. Price resistance. It's not a super well-defined level, but it is a level that I've had here, and I think it's worthwhile. And so that would probably be double that, probably another 7-8% plus in Bitcoin. And again, so we need to pop this level. We're at resistance. As I like to say, resistance is resistance until let's take it out. So that's your potential upsides. Stops are going to be commensurate with your entry price, your preferred price targets. What I mean by that, the higher one's price target, the wider stop they can allow and still have a favorable RR. What that RR is, it's your own preference. 2 to 1 is usually minimum for me, meaning I'll risk $1 of loss to make $2 of profit. Again, it depends on the trade. 3 to 1 is a little more attractive RR. Also depends on your, batting average on that particular security. If you're batting 500 or more, you can maybe use a wider, less favorable RR. Typically the lower probability of trade of success that I take, I'll want a more favorable RR to offset the greater chance of that trade being stopped out or failing. So there's levels there. That's the actual crypto. And another variation of the futures, BRR, your Bitcoin futures. Remember, if that contract is too large for you, it's a pretty sizable contract. 2 contracts right now is 849,350. Half of that, what is that? 400, 4.25. So it's about $425,000 exposure to Bitcoin per contract on BRR. But they do have the what is it? No. 1 second. MBT, that's what it is. MBT is your micro Bitcoin contract. Trades at the same price level, so you can use my BRR chart. Only has a smaller multiplier. A multiplier has had the leverage factor in there. It's much smaller, quite a bit. So you have more volume in MBTs. You can scale in, scale out. Again, everyone's number is different. So if that's your number is okay with that, use BRR. If not, use MBT. Or there are many. Remember, we have IBIT as a swing trade idea on the site, an active trade. Obviously, for an active trader, we've already hit here. I'll get to that. But before I leave this, let me just show you. So you can see on BRR right now, the futures, you have this more of a. It's the same resistance level I just showed you on spot Bitcoin there. About 80,000 on the futures, about 84,594. We'll round that up, 84,600. With one little failed break above, and that it backfilled that gap right there. You can see this gap, and so. And you also have an intersecting minor downtrend line as well. So this is what I call let's just call it the triple L, let loose level. If we can pop that, Bitcoin should let loose, trigger a short covering rally. But as I like to say, resistance is resistance until it's broken out. We are in a downtrend. Do not get married to anything you buy right now, long, short, bullish, bearish. This is when the market will... has the potential to severely disappoint you. In other words, stay flexible. Charts are dynamic, therefore so is my analysis, and yours should be as well. This market can do whatever it wants. News flows can change on a dime from bearish, which they've been for a while, quite a bit lately, to all of a sudden bullish, or it could get worse just when you think things can't. Remember, I've showed you on the weekly charts recently in videos that if you think we're oversold on the daily, but not on the weekly, and if this market wanted to take another 10% down before blinking, it could do it. I've seen it do it before. That's not my current preferred scenario, but I'm extremely open to it, and I will not allow my bounce longs to get caught in another 10% downside. So you got to pick your number. And again, I always say this too, if you're new to trading, investing, this is not the time to start cutting your teeth and learning. You can paper trade or keep positions really small where you're not going to get hurt. Small, you're going to have to figure that out. Know that, again, I speak all the time to what I make a lot of terms up in this thing. One of them is called know your security rule. Know that if you're new to this and you're trading Bitcoin, again, Bitcoin will go up and down easily 5, sometimes 10% in a day. If and you have to put in, before you go into it, what's my loss potential going to be. And all right, so before I move away from this chart, just know, okay, so there's a potential bounce target, this next downtrend line. I give you levels and stops. What you want to see ideally, you have the makings of a near-term uptrend. Obviously, you want to see any pullback contained by that previous reaction low. And it's not an all or none thing. They can sometimes run down there, put another low there, and now you have a reaction low here, followed by an up and another reaction low, and you could still have an uptrend. So, but it just, each one you take out chips away. So traders will usually set your stops. I like to put them a little bit out of range. You put them too close to the level everyone else has them, they're going to come down. The AB, the powers that be, run those stops and then turn it back around. So again, it's up to you depending on where you entered, what you're targeting, where you set your stops. I'll get to IBIT, but before I do that, let me show you. Well, I flipped over to the site, just so you know, TJS. I've replied to you there with Costco. There's my charts, key levels. You can read the response there to your, I think you put that question up yesterday. I just caught it earlier today. But go under here to resources, or you don't even have, there's a picture of a calculator right here. I'm clicking on that on the upper right-hand side. Individual position size calculator, and this is great. So whatever your number is, whether it's 1,000, 10,000, 100,000, or a million. Put your number in. Let's say it's 100,000, and beta adjustment. You want to say, okay, Bitcoin, for example, is very volatile. So I don't beta adjustment. 1.0 would be something in line with the S&P 500, the stock market. That's so market goes up. Just typically lately it's up or down at least 1% a day is what the S&P's been doing, because volatility is higher than normal, and it's not been unusual lately to see a 3% plus up or down day, but that's usually about the higher end of the extent of the range. Again, there's nothing that says the S&P can't go down 5% in a day. It will after a certain level. They start hitting circuit breakers, but again, so just kind of gauge it. So you say, okay, if you're going to trade Bitcoin, all right, I'm going to take, Bitcoin, like Randy said, it's probably at least 3 times more volatile than the S&P. So you can take it down 0.3, 0.35, whatever, and that would be your, position size. So it would say basically if you normally swing trade 100,000 SPY, you're only going to go down to 30,000 in Bitcoin. And if your number is 10,000, then it's going to take you down to 3,000. If it's long or short, you're doing a long trade and you buy it, whatever, I don't know, just let's say it was $30 and you're targeting a move up to 38. It's going to tell you $38, and your stop's going to be at 27. It's going to give you all that. It's going to tell you if you're right. You're going to make 26.7%. You're going to make $8,000. And here's where it helps, again, for those of you, because I've been doing this long enough, and psychology will come into play when people exceed their mental dollar loss. If they don't even know what it is, that's when they start feeling pain. They start second guessing the trade. So that will show you if you did that. In that example, again, entered something at $30 with a stop price of 27, you're going to lose 10%, and that's going to be $3,000. So this helps you kind of plan your trades and and make sure you're not overexposed on any one position. And again, remember what I said, if you're trading QQQ, the NASDAQ 100, or any of the derivatives thereof, the leverage ETFs or futures, and Bitcoin, keep in mind those are sister trades right now. They're highly correlated trades, and so you need to factor those in as well. Okay, back to the charts, and then I'll get away from Bitcoin. I wanted to also cover Ethereum, but IBIT is the current, most recent trade idea. As I said, we've hit our third target and we bounced as expected. And again, same downtrend line as I've been saying since last week. This is a potential bounce target. If hit, that's going to be a bounce of roughly, let's just say it's hit over here somewhere, be about a 15% bounce. Or so, as an active trader, you turn around and we profited, we shorted right here, I think it was, so we made 18-19% on the short trade. If you covered there, you bounce, turn around, put another 15 in your pocket. Now you're net plus 33%. Or maybe you don't, you're just going to stick with it, but you're going to sidestep the, you don't want to go long, you just want to wait to re-short. At least you're sidestepping a 15% give back of profits. And then bigger picture. So I talk about, okay, right now I've been talking about, the bounce for the last week or so. But if we crap out, what do you want to see? You want to see that recent low hold, because if the recent low gets taken out, you're taking out both that near-term uptrend line right there, as well as price support, which is this big old gap right here, that big gap from right there. And then that's going to increase the odds we're going to go down to those deeper targets. Okay, I flipped charts. I think I hit the pause button. So I'm going to go over what I just covered here. Please forgive me. There's no way that I can know when I hit pause. I hit the pause button recording when I switch charts. I just toggled over to the equity markets. Hopefully I covered everything on Bitcoin and Ethereum. I was covering Ethereum last and got that. If I didn't, I'll just post a chart underneath this post in the comment section when I get this video out. This was the recent basing pattern right here. We had a breakout the other day. The breakout got sold into. There were more sellers lurking in the shadows, just wanting out. And so that breakout failed right here when we fell back down into the range. Now we're testing the top again. It's still, to me, in a significant level. After a big correction like this, you just have a lot of Longs, sitting there crying, staying up at night, sleepless, just wanting the first bounce to get out, wishing they would have sold their Nvidia, and QQQ or whatever, 2 months ago, but they didn't. And then this impulsive drop just didn't let them out. So you're going to get that. And so it was the first decent bounce and we got sold into. Now, the $1 million question is, are there more buyers right now than sellers? Are the sellers, at least temporarily? I'm only speaking temporarily. I still have a pretty good degree of confidence, high degree of confidence. My longer term targets will be hit in the coming months. But again, as I mentioned yesterday, I don't care where I think the market's going to be 6-8 months from now. I'm positioned for today and tomorrow as an active trader. So the levels to watch are still that same level the other day, which we broke out and then back tested and rallied, got sold into. But if we can power up now, we just need to take out that recent high. Remember, we're still, the most important, the breakout still very intact. The breakout of this, the downtrend line there on QQQ, and then the secondary, what I call BOD, benefit of the doubt, breakout, back test, and so far a bounce, and we need to do this. And then that will bring us up to that about 7%. I was calling, been calling for about a 7% bounce, somewhere up there, give or take, about, roughly to that 496-ish target right there. Again, this is just on the 15-minute chart. RTY, IWM, small caps, I gave that nice and clean chart. Textbook breakout right there on the 15-minute chart. Again, this one was given to you on the front page as a trade idea. I need to mark. I'm going to mark it up right now as I speak. There's a gap right there that defines that level, plus another gap right there. Bottom of that gap, the top of that gap. That's why that line is there. It should have been there before and clear. And that's where traders see these levels. This is my style. I'm going to say this. I've said this many times. My style of technical analysis works very well. My experience in times of increased volatility. When the markets, when you're in one of those robotic grind hires like we were in 2022, 2023, algos, machines, just programmed to buy every dip, technical analysis, the big levels work. Don't get me wrong. I don't think we missed a pullback trade. I highlighted objective levels, pullback to support. I've highlighted bullish, chart patterns in bullish setups on the 15, 60-minute charts. They still work, but this kind of micro stuff where you can sit here on the 5 and 15-minute charts and just pick the market off, little levels here. That's where it really works well. Because right now, and my theory on that is when the market really starts to wobble like this, all of a sudden the economists and the analysts, they don't know up from down. They don't know what to make of anything, and they're blaming it now on Trump being erratic. Trump didn't do anything different than he said he would before coming in. He told you he'd be throwing on tariffs. He's as erratic as he's ever been. But the economists and analysts are going to blame that as for uncertainty. Anyway, so you get this uncertainty in the market, and fundamentals, they're having a hard time processing. Is the economy still strong, or is it really slowing? Is it slowing at a rapid rate? Blah, blah, blah. So this is where technical analysis shines, and traders really are hyper-focused on these levels. And I'll give you one more here. I don't know why I'm on this 15-minute chart. I already gave you official targets on, I think, 60-minute? Let's see. Where are my targets here on this trade? Yeah, right here. That's it. Boom, boom, boom. That was our first resistance / target where I had the arrow breaks, hit that. We overshot it, pulled back, and tested it successfully. Need to pop up. Boom, 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 boom. That's still my maximum target right there of the downtrend line. From the lows, if hit, again, maximum target. I don't think I'll be along that far. This is a more likely target here, about 214. Why is that a really nice target? That'd be about an 8.3% rally from the lows. You've got all these reactions here. Then you broke down, back tested. I'm going to color code it up for you guys so we can remember that's if we get there, we got to look at things and see if I'm still long at that point. Would it be time for soft or hard reversal? What does that mean? I'll usually, in times like this, as I start to approach targets, peel back either one of two things. Depends on what's going on at the time, what I'm seeing. One strategy I like to do is start tightening up stops where I have looser stops now. We're still seeing a lot of volatility. We start to get going up and approach that target. You can keep ratcheting your stops up. You can either do that automatically through your broker. It's called a trailing stop. It will automatically adjust as prices go higher. Or you can manually ratchet up your stops. I like to set my stops tactically instead of just arbitrary, a 1% trailing or 2 or 3% trailing stop loss. Tactically is to set stop losses just below support levels, just at a range of where they're likely to dip and clear the stops on it. And so that's usually my preference, but depends again what I'm doing. Sometimes I'll decide to take the afternoon off, and in that case I'll set a hard or trailing stop. And I'll also have OCO targets if I leave my desk. OCOs are, in my opinion, I've talked many times in the past about them. There means one cancels the other, or some brokerages will call them OCA, one cancels another. Again, I think the best thing since sliced bread, you set them good to cancel on your time, not a day order, because it'll expire at the end of the day. So make sure you select good to cancel. And it's simply two orders that are paired together. Let's just say in this case, a sell limit order at 214 if your profit target's hit, with a stop loss at whatever your number is. Let's just say right now it's at 199 right there. And it's set and forget. And so you can leave the desk, your desk. You don't have to worry about it. If it goes down here, you're going to be stopped, and it's going to cancel that other sell order up there for you automatically. Likewise, if we go up there, that order's hit, this one gets canceled. So you don't have a standing order anymore. And probably one of the, other than that convenience, which is a big one to me, and this one I think is huge for everybody, is discipline. By doing OCOs, you have a trading plan. You set those orders according to your trading plan. My profit target is X, my stop loss is Y, and you're not going to second guess it because you can always modify that order if you need to, if the charts tell you. But if you do that, then every time the market does this, if it's on the way up to your order, you're not going to second guess yourself and say, oh, you know what, I was wrong. The market's not going to rally. Just can't do it. And then you get shaken out early. So that's that. There it is. IWM. What else do I want to cover for you? I will say, one thing I've expressed my concerns the last couple days. I've noticed I always have at all points in times and I just have a lot more real estate, a lot more screens than you see that I'm recording here. But to the right of that, when I enter an ETF or a sector or whatever it is, it'll load the components. I have them sorted by market cap, meaning the ones that have the highest weighting are the only ones you have to worry about. These are the top 10 components of the NASDAQ 100 or the MAG 8, and they will determine where the market goes, both the NASDAQ 100 and the S&P 500. And so in the last few days, I noticed when a lot of things were green in the indexes, the big MAG 8 were sucking wind. Today, they're about on par. You can see here the NASDAQ 100 is up 1% right now as I speak, 0.98%. Apple's up 1, Nvidia's up 2, Microsoft's up 0.9, Amazon 0.4, Alphabet 1.4, Meta down 0.5, Broadcom 2.1, and Tesla 4.0. So there's at least they're on par right now. They're not underperforming, and that tells me that both individuals and institutions are stepping in. And at least today, one day doesn't make a trend, guys, but right now that is a net plus that I'm seeing. I'm not seeing, as I was the last couple of days, distribution into those big stocks. In fact, I addressed that. And then one of the comments here, I think it was under this one here, somebody said, great insights. I've been having similar feelings about the market not bouncing as one would. Something doesn't seem right. And so, yeah, I said, at least, they mentioned, if it can't reasonably bounce, I'll have to dial back my long positions to avoid any overnight risks. Yep, agreed. Either that or just tighten up your stops. Again, with individual stocks and ETFs, yeah, you have that overnight risk. Futures, the nice thing is In that case, I'll just set stops because I don't have overnight risk. Only have overnight risk after Friday's close until it opens back up Sunday. And so with futures, NQ being, or RTY, the small caps, they're liquid at 3 in the morning. I don't worry about having a market order. Sure, I might lose an extra, quarter point or whatever on a fill, but I get to sleep at night knowing that if the futures all of a sudden just do this in the middle of the night and my stop is right here, I'm going to be out of that position. So, but stocks, you don't. If the futures do this overnight, close here at 4 p.m. and you open there at 9:30 the next morning, standing stop loss order is going to get filled at the open, and it's going to be in line with everybody else's on those order imbalances. So make sure you know what kind of orders you use. And if you use a stop limit order, well, that can be even worse, because stop limit orders say sell me here and only here. And if you gap down to here at the open, that stop limit order is still open, and they will not fill it unless the stock goes back to that level. It's triggered, the order's triggered, but not fillable. You can only be filled at or better than your stop limit price. So in that case, you could do this. Market could gap down, you can come up a little, and you could be down 20% from there. And you say, well, shoot, man, I thought I had a good stop limit order. No, so you got to figure out what to use, whether stop loss. I usually use the stop loss orders, although sometimes if I'm in a stock, I'll yank it at the open if I see a lot of order imbalances, wait for the dust to settle and reestablish that order anywhere from a half hour to an hour after trading once the order imbalances have subsided. Hey guys, last one I'm going to leave you with. I want to get this out before it's, if it hits this level soon, before it's too late. This is OJ frozen orange juice futures. Unless you're a futures trader, there is no option, to the best of my knowledge, and I'm pretty certain there aren't any ETFs that trade it. Where am I trying to go back here? There we go. You can see I have these two major peaks, and it goes back for years. These were this capped orange juice prices for years. This level right here, 227.30. You can see it. And then we had a breakout here, and OJ went parabolic. I covered that recently, and parabolic and pretty much parabolic, and put in a top. You could probably put a trend line there. I don't have it. I'll draw it right there. And went on to break down after a big divergent high, big negative divergence. Now it's coming up on that support level again. I moved the other reaction low there. Big support. I would put what I would consider very high odds on at least a reaction. This thing's been in free fall. To say it's oversold would be a gross understatement. You can see down here the RSI pinned. And then when you go down to the 60-minute chart, you can see, which I like to see, you can see it's building some nice positive aka bullish divergences. Let me just hand draw these in right now for you so I can wrap this up. So this is a 60-minute chart right here. You could probably draw a nice downtrend line there. And so remember, coming up on daily support, and looks good both as a long there and or once you see a reversal, especially a breakout of a downtrend line, for a nice, let's just say minimum double-digit rally, 10% plus. All right, guys, I am going to wrap the video up here. I will continue to hunt for trade ideas. I will continue to try to catch any replies, questions that you have. And like I said, if I missed anything earlier in the video when I paused it, I think it was Ethereum, which looks good too for a bounce, especially if Bitcoin can continue to, and the markets. Remember, they're all together. Bitcoin, Ethereum, QQQ, RTY. All right, I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.